Picture a regular Monday in America. You wake up, grab your phone, and your banking app won't load. Then your employer texts, payroll delayed. The market opens, and it's absolute chaos headlines, rumors, scrolling red numbers, and people refreshing their screens like it'll somehow change reality. And then you start to hear the word people usually avoid saying out loud, collapse. Somewhere in the middle of all that noise, one question starts popping up everywhere. From barbershops to group chats to your late night doom scrolling. If the economy collapses, what happens to Bitcoin? Let's be real about what collapse usually means for everyday people. Most of the time, it's not some movie apocalypse. It's a fast chain reaction, layoffs, credit tightening, businesses cutting hours, markets tanking, and a rising feeling that the institutions we rely on, banks, payment systems, even just the idea of stability, are wobbling. It becomes a trust event. And whether you love it or hate it, Bitcoin is basically a 24/7 trust gauge that never closes. Here's the part that catches people off guard. In the first wave of true panic, Bitcoin often drops. When bills are due and fear is everywhere, cash becomes oxygen. Investors get margin called, funds de-risk. Regular people sell assets to cover rent, groceries, and car payments. Bitcoin is liquid and trades nonstop, which sounds like a superpower until you realize it also means it can get dumped fast when everyone is trying to raise dollars at the same time. We saw this during the March 2020 shock. Bitcoin didn't act like a calm bunker at first. It crashed with everything else, then later recovered hard. After that first shock, the story splits, and it depends on what kind of collapse we're talking about. If the collapse looks like a classic debt bust defaults, demand falling off a cliff, tightening credit, then Bitcoin can remain extremely volatile and may struggle short-term because people prioritize essentials. In that world, the Bitcoin have the price crucial, sharp drops, violent bounces, and moves that punish anyone who thought collapse automatically means Bitcoin up. But if the collapse looks more like a confidence crisis where people start believing the money itself is being diluted to keep the system, running Bitcoin's core narrative gets a lot louder. Bitcoin has a fixed maximum supply of 21 million coins, and the rate of new Bitcoin issuance keeps slowing down. The most recent halving in April 2020 cut the new issuance rate again, which matters because it reinforces the idea that Bitcoin's supply rules don't change just because policymakers are under pressure. In a world where people feel their dollars are buying less and the rules keep shifting, fixed supply assets tend to attract attention. That doesn't guarantee a straight line up, but it can create a different kind of demand, not get-rich-quick demand, but I want an exit from the system demand. Now, let's talk about the part people feel first, banks and payment systems. In the U.S., most depositors are protected by federal deposit insurance up to the legal limit. When banks fail, insured depositors are usually made whole. That's a big deal. But even if your money is insured, a crisis can still create friction, transfer delays, tighter controls, withdrawal limits, and a lot of anxiety. This is where Bitcoin's different system pitch becomes relevant. If you self-custody Bitcoin, meaning you control the keys, you not depending on a bank's doors being open or an internal approval queue. Of course, self-custody is also a huge responsibility. Losurke. Click the wrong link. Get. And there's no help desk. Sovereignty cuts both ways. There's another big shift people sometimes miss. Bitcoin is more Wall Street now than it used to be. Since U.S. listed spot Bitcoin ETFs launched in 2024. Bitcoin has a giant new pipeline connecting it to traditional finance. That can deepen liquidity, but it also means Bitcoin can get pulled into the same tide that moves stocks. When big money is forced to de-risk, Bitcoin can get sold as part of the risk bucket. Even if the long-term story Bitcoin is an alternative to the system, so what happens if the economy collapses? The honest answer is Bitcoin doesn't do one simple thing. In the first shock, it can fall hard because panic sells liquid assets. After that, its path depends on whether the collapse is a deflationary debt bust, where cash is king, or an inflationary confidence crisis, where people look for assets with unchangeable rules. Either way, Bitcoin will probably be volatile, more like a storm than a shelter, at least at first. If you take one grounded takeaway from all this, let it be this: Bitcoin isn't a guaranteed parachute. It's a different kind of tool. And in a real crisis, the question isn't just will it go up. It's whether you understand what you own, how to secure it, how it behaves under stress, and whether your plan still works if the price swings violently while real life is demanding cash. Because the real point isn't hype or fear. The real point is that sovereignty isn't a vibe, it's a skill. Thanks for watching. If you found this helpful, hit that subscribe button. See you next time.